Hey, it's Michael Saul, but everybody calls me Tiny, and this video is the biggest piece of stock manipulation in history, plus more signs that we're headed for trouble. This is stock market analysis for the week of August 13th, 2018. If you would like to receive intra-week updates from me, go to www.attackthemarkets.com. Put in your first name, your best email address, and then follow the directions, and you'll be on the list, and you will receive intra-week updates from me as they come out. If you would like to join the Facebook group, facebook.com/groups/attackthemarkets. If you like what you hear, give me a thumbs up and leave a comment. And to never miss an update, click subscribe and hit the bell so you'll be notified. All right. So before we get into the title of this video, let's take a look at the market. Now, if you've been watching my videos for the past, several months at this point, but most recently, especially, I have been talking about us having a good chance of going to new highs in the S&P and probably the Dow also, but the Dow could diverge and not hit new highs with the rest of the indices. So last week, the S&P went up, came just shy of new all-time highs and pulled back. So my opinion has not changed. Friday was weakness based on Turkey and what's going on, and the lira dropped to, however many year low, maybe even an all-time low against the dollar, or like a really, whatever it is. All right, and I'm not just dismissing the Turkish government or anything like that. I don't mean that as any disrespect, but talking about the U.S. market, I do not think the Turkish economy is going to have a lasting influence or lasting effect on the U.S. market. I just don't think it's going to matter. Okay, so I believe that this pullback, whether it's here or whether it goes a little bit further, is going to offer a buying opportunity for a trade to new highs. I still feel very convicted and very strong that that is going to happen. What I'm not very convicted about is if that will start a new leg to the upside, or maybe just hit a marginal high and then pull back from there. So let's go through the indexes really quick, and then I want to give some opinions on what I think is going on here in the market. If I could not drop my mouse off the side of my desk, that would be a start. All right, so here's the Dow. Okay, lagging, but I think there's a chance that it gets to new all-time highs as well. It doesn't have to. Russell continues to move sideways. I think that's going to break and move higher. Mid-caps hit a new high on Tuesday, but pulled back. And then the NASDAQ just barely fell shy of highs as well. Okay, one of the reasons for the NASDAQ not really getting up and moving very far is the semiconductors. The semiconductors are acting not so nice. Now, they're still above the 200-day moving average, so I can't be biased short, but this is not a bullish-looking pattern. Here's NVIDIA. Doesn't look too bad. Here's Tanker. Here's Intel. Right, so Intel had the report that, we're behind getting the chip out. Then it got a little bounce, but then Friday back below its 200-day moving average. Banks. Okay, the banks also, they're looking a little rough. Not terrible, just not as strong as I would like them to. I'm not looking at the banks and going, wow, this is an easy short. Yeah, I don't see that. Okay? But you can see here, you could draw a little neckline here, and maybe if it could pop up and get going. Look at a couple of quick stocks. Here's Bank of America, not looking bad. JP Morgan, not looking bad. Citigroup, below the 200, between the 200 and the 50. Here's the broker-dealers. So the broker-dealers are definitely not acting as well. Here's Goldman, which is more of a bank, but it's under the broker, the XBD. You can see here, not really acting so nice. It hasn't acted that nice in a few months here. Here's Morgan. Looks like Morgan wants to test those July lows. Here's Interactive Brokers. If 60 gives way the next time, looks like it could have a quick trip down to the 55 area. Just keep your eye on that. How about the biotechs? So the biotechs are acting good relative strength-wise. They're right up at the highs here. Look at some stocks. Amgen pulling back off the highs, but as of now looks good. Here's Biogen, a little sloppy for me. And here's Gilead. These are the ones we usually go through, more sideways than anything. Let's look at the glamour stocks. Amazon hit a new high on Thursday, paused on Friday. The Zuck book The Zuck book. So the Zuck book had an earnings downside move off of earnings, and this really isn't a bear flag. At best, it's a stealth bear flag. Why? Because it's not really in a downtrend. It's in a sideways consolidation. But if it does break here, we could get a retest of those March lows here, right down here at 149. All right, now if you read our friend Paul Schatz's blog this week, actually got picked up by a couple of big media outlets. He talked about Facebook putting in a high that will be seen for many years. That's what his call is. So you can go to his blog and investfortomorrowblog.com, and you can read all about what he has to say about the Zuck book, or the Facebook, all right, as its real name is. Okay. Here's Apple. Apple consolidating right under 210. Looks pretty strong to me. Here's Alphabet. Yeah, more you could draw in there we go, and there we go. You could draw more of a coil in here. Okay. What about Netflix? Yeah, Netflix right up to the 20. It's just a little shy of the 20, but man, Netflix doesn't look like a bullish setup here right now either. Now, notice that Netflix ran into resistance up here at 420. It's pretty ironic that that is the target that Elon Musk said on Tuesday that he would be able to take the company private at. And that is what I am referring to in the title of this video. I mean, just completely blatant stock manipulation. I'm sorry. I mean, whatever you think of Musk as a person, whatever you think of his visions and all that's fine. I mean, you cannot be the founder and CEO of a publicly traded company, come out in the middle of the day and say, I have the funding in place to take my company private. It's insane. Now, just so you know that it's not sour grapes, all right, I was not short Tesla at the time. I don't own puts on Tesla at the time. I didn't own them at the time. I don't own them now, okay? So it's not like, oh, he screwed me. No, all right? Not sour grapes like that, because that's how it could sound. I mean, even when I was, like, talking to somebody about it, I'm like, boy, I really sound like a Tesla short. No, I'm not a Tesla short, okay? But if I was, I'd be really pissed, and I'd be looking for that lawyer that's putting together the class action suit, which I'm sure there's at least one trying to do that. Now, I read some articles over the week, so far over the weekend. I'm actually doing this on Saturday night. And yeah, there's talk that there's more than likely going to be an SEC investigation. I just can't see how there isn't. He could face up hundreds of millions of dollars in fines, and there may even be a criminal prosecution. So to me, I just don't get it. I mean, this is an insider. I just don't understand. And if he gets away with a slap on the wrist or a parking ticket or whatever it is, or no big deal, I mean, what's that going to open up the market to, right? It's bad for the market if he's not, really, I mean, punished for this. I no other word to put it. I don't know what to say here. I can't believe it. I really can't believe that. And look, right, Twitter is a battleground with, I mean, everybody gets upset over the president's tweets and other people's tweets, and people say racist stuff and all over, and then they're like, oh boy, I guess I shouldn't have said that, all the stuff with Roseanne. And it's just, but this is just crazy. I mean, this is a public company. I mean, he's got to know you can't say this stuff. Anyway, that's my opinion here on Tesla. Let's go through bonds. Okay, so bonds still in a range, and maybe it's setting up for a launch pad, and maybe bonds are going to get a nice kick to the upside, but right now, just a range. Here's oil, and I had mentioned this a few months ago, that oil usually tops out seasonality-wise into the July 4th holiday, and that's what we're seeing now. So what's going to happen here? Don't know. Gold looks like it wants to trade lower, though. Here's GLD. GLD looks like, if we can throw up a Fibonacci grid, which we will, just let me make sure. It's probably the same one I already, no, it's not, and it's a little screwy here. I'm going to do it live, and I'm not going to edit it out, because I'm going to show you how to do it, in case you want to learn. We're going to edit it. We're going to take that 23.6 and we're going to make it 78.6. So the next target for GLD would be down here at 112, just a little under 112. It's a pretty nice move from here considering how far it's come down. And you read articles, and I talk to people all the time, and they say, well, nobody's speculating in gold anymore because of Bitcoin and crypto. Well, I mean, Bitcoin's getting kind of lit up as well. So, I mean, not as bad. I think last I looked, it was 6,200 a coin. Still haven't bought any crypto. And I still don't know if Bitcoin is over or not. I don't know if it's going to appreciate from here or if it's just going to get killed. I don't have a strong opinion on that, but certainly money's not coming out of gold and into Bitcoin. I mean, Bitcoin is not rallying really hard. So anyway, let's recap this, and then I want to talk about the second part of the title of this video. So I think we're going to new highs. I have strong conviction that that's going to happen in the S&P. Not so much in the Dow, but I think it can happen. Where my conviction overall, forget strong conviction, where my conviction starts to wane and get a little floppy is if it's going to start a brand new leg. So I'm looking for weakness. Hopefully we get some continued weakness, maybe even back down to the breakout point, but maybe just down to the 20 EMA and a nice reversal, and then looking for a buying opportunity. So now the second part of the title of this video is some more warning signs just to watch out for. Now, I want to be clear here. I am not saying we're in a short sale setup here. I'm not Chicken Little running around with the sky is falling. I'm not a bear, okay? But I've been saying it for weeks, months, years. As the market continues to run, especially as it's headed to new highs, it's prudent to continue to trail stops if you're long. You could do whatever you want. It's your freaking money, okay? But when you see what's going on, the economy is just white hot, okay? Here's an article. Hang on one second. Let me grab it. So here's an article from Friday, and it's home prices rise at the fastest pace in more than 4 years, defying expectations of a pullback. It's just crazy. So we're getting into the exponential movement in prices here where things are just starting to kick it. Now, there are areas where it's going down, like San Francisco Bay Area in Southern California. San Francisco down 9%, in Southern California down 12%. And they say there's some problems in New York, too. A friend of mine told me the median price of the Hamptons fell under $1 million. But then I read today another article that said New York has now become the priciest city in the United States, where New York City, where you can pay up to $10,000 a square foot. So, I mean, but because of the new tax changes and how much you can deduct and all that, mortgage interest and all that, it's become more difficult on the big earners because they're not getting the tax savings, and there's supposedly a little strangle put on really high-priced homes. But, I mean, as far as mid-priced and low-priced, yeah, just crazy. I mean, just really going nuts here. And you could see here, I mean, economists keep predicting a slowdown, but home prices haven't gotten the memo. Here, housing market has hit a significant slowdown in recent weeks. Here, the CEO from Redfin is saying. All right, by the way, here's exactly what you should be eating to lose weight. Maybe I should read that, but no, I'm probably not going to. All right, so Redfin stocks dive after top execs say sudden downfall is expected to continue in August and September. So he's saying that the housing market hit a sudden and significant slowdown in the past few weeks that could continue in coming months. So I don't know. You're getting two different stories on this, but what I'm pointing out here is that if home prices are still rising at this pace, right, and the average home price is now at all-time highs or whatever it is, I mean, it's just the sign of a white-hot economy. And a lot of people have a significant bulk of their wealth tied up in their homes. And if home prices go down, and they're suddenly underwater, and if the job market softens a bit, once again, the job market cranking. And I know you could try to read that a million different ways. Well, what about all the self-employed people and the people that are unemployed, but they fell off the unemployment benefits? Okay, great. But supposedly there are more jobs available than there are people to fill them. And if that softens, okay, what's going to happen then? What's going to happen then? What's going to happen if people need to tap into their homes, or if they've already tapped into their homes and there's nowhere to go? Okay, it could really turn into something really bad. The second thing is I want to show you something that's more comical than anything, but it's a little scary too. So my friend sent me this. This is a local Maserati dealer, and they're selling pre-owned Bentleys and Maseratis and Ferraris, and it's great. But if you look at the terms, and they're a little small here, but I'm going to read it anyway. It's 20% down and 144 payments. Guys and gals, that's 12 freaking years to buy a used car. Are you kidding me? Are you kidding me? I mean, really? Look, I'm all for credit. I'm all for buying stuff that I don't know. I'm not all for buying stuff you can't afford. But and when I mean I'm all for, I've bought stuff that I didn't need before. I get it. Okay, so I'm all for, but I understand it. But do you really need a car that's going to take you 12 years to pay off? 12 years! And look, they're not offering it if there's not a demand for it. So again, that's another sign that the economy is, hey, look, these people there, they want the Ferrari, yeah, give them 12 years to pay for it. And it's still like ridiculous, still like $2,000 a month. I mean, are you kidding me? It's a mortgage payment. It could be 2 mortgage payments depending on where you're buying, despite how high home prices are. So anyway, that's what I'm seeing here in the market, and that's why I'm saying, look, I'm not a professional, so I'm not going to give you financial advice. I don't know what your situation is, but I will say it is not the time to just get Pollyannish and, it's going to be okay, everything's going to recover. So what if prices come down in houses? They'll definitely recover. They'll definitely come back. So what if we pull back? The market will definitely come. I think we're setting up for a very big pullback. Big. I'm talking like, I don't think 10% does anything. I think 10% moves the needle. I think it could be 30, 40, 50, even 60%. Now, I'm not timing it. I'm not saying get short here. I'm not saying sell everything. I tried to be clear that I'm not Chicken Little here. All right? I don't see the reason for us to start selling off here. But if all this evidence continues to pile up, and there's any weakness in the job market or anything happens that is perceived as, hey, this is not good, or another black swan event, a Lehman or a Bear Stearns, whatever it is. I mean, I don't even know what the new Lehman or the Bear Stearns would be. Could it be auto financing? Could it be home financing? I mean, they're giving out loans like nothing again, right? So it's just something just to pay attention to. Like I said, I'm not trying to time this at all, but again, now is not the time to just close your eyes and dream and think it's all going to be good. It's time to dig in, to look at your holdings, to look how you're positioned, to look what you're doing, and make the proper adjustments based on your risk tolerance and your wants and needs. Okay? That's it. Again, I'm not a professional money manager, so I can't look over your portfolio, but you should. All right, so that's all I have. I'm still looking for new highs here, even though I think that the economy's white hot, and I think we could get a deep pullback. I'm not timing it right here. So the next steps are wait for this pullback to end. Maybe it'll go a little deeper, and then look for a buying opportunity. Questions, tiny@attackthemarkets.com. Don't forget to give me a thumbs up. Leave a comment if you like what you heard. And don't forget to join the mailing list if you want to get intra-week updates. Have a great trading week. I will talk to you in next week's video. Or if you have any questions, like I said, just drop me an email. Have a great week.